Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do you got going on with the stock market? Well, I think the stock market wants to work itself higher. Now, we had the S&P drop by approximately 10%, and then it rebounded half of that. It rebounded 5%. Now, that would be what's called a Fibonacci retracement level, right? You came down 10% and you bounced back and got up half of it back, right? And then you hit the resistance at the 200-day. Now, we tried to get through it and we got rejected the first time. We're going to try to get through it again. Hopefully we can stay above it this time and they will push the market up higher. That's my take. Now you could come down and retest the recent low or even make a newer low, but I think the recent low probably will hold. We'll see how that plays out. Maybe it does, maybe it doesn't, but I do think they're going to push this up one more time. I don't think this is the big crash. Look, at the big crash, you're going to need to get into a bear market of at least 20% off. Now we came down 10%. You're halfway there in the Russell, the IWM, the small caps, they get about 18%, so they're close to the bear market, but it's not the big one right now. It's not here yet. I wish it were. I'd want to start shorting the market, but it's not here yet. I think they're going to push it up one more time, which will be probably the last exit point to get out of the market before it does have the big pullback, and they'll go into a bear market. It'll start with 20% and could easily double that to 40%, could even double that again to 80% off. Now look, if we revert back to just the mean, it's going to be much worse than a recession. Now, I already think we're in a recession. I think we're in a recession right now, and I think I can prove this just with, well, just a simple argument that I want to talk about today, right? I want to talk about how people are using their credit cards and why credit cards are at a record high. They've never been more use of a credit card. Now look, banks have already started to charge off losses on their credit cards, right? Why? Because people are delinquent. They're not paying. Okay, so consumer credit card charge-offs, Capital One, 6.35%. They just wrote it off, right? 6.35%. I mean, that's the charge-off. A Discover card, 6.303%. Just wrote it off. These are charge-offs because people are not making the payment. They're maxed out on their card and they're not paying it off. Okay, now basically, consumer credit card defaults they've never been this high, right? They've never been this high. You have to go back on Capital One, you'd have to go back 13 years to find a time where they had that kind of charge-off. Let me think of 13. Well, that was the great financial crisis. You'd have to go back, and that was a recession, right? The great financial crisis. We were in a problem right there, but they papered over it by printing the money. But we're back at those levels with defaults. Credit cards are going into default levels. Now, just in 2022, the credit card default level was not even 1.5%. That's just 3 years ago. It's quadrupled since then. But they tell you we're not in a recession. Of course we're in a recession. Nobody can talk about it. It's like inflation. They want you to believe it's less than 3%. No, it's up still around 10%. But you can't talk about it that way because it frightens people, right? And people don't like to be frightened. But credit card balances are at a record high. And they just added $45 billion to that record just in the Q4 of last year, just last quarter, right? It's like 1.2, $1.3 trillion. I don't even know. It keeps going up, going up, going up. But it's at a record high. It's never been higher. Now, it's kind of interesting. I want you to understand this. There's two types of people that use credit cards, right? There's the rich people and there's the poor people. Now, the rich people, they go out and they buy with credit cards. They put everything on their credit card and then they pay it off at the end of the month. And what do they get? They get cash back. They get airline miles. They get free perks from the credit card companies. Why? Because they're rich, right? Now, what about the poor people? The poor people are falling farther and farther behind. What do they get to do? Well, they get to make the minimum payment. The number of people making the minimum payment has never been higher. Do you think they're making the minimum payment payment because they have money? No, they're making the minimum payment because they're flat broke and that's all the money they have. They don't want to pay 23% interest on that credit card. And now look at the credit interest on credit cards never been higher. The usage of credit cards never been higher. Kind of interesting, right? That shows you that people are desperate right now. People are carrying balances at 23%. And just to show you the desperation, I mean, I'm sure you all heard this already, but I mean, DoorDash, what are they doing? Hey, you know, when I order my cheeseburger from Wendy's, I can make 4 payments on it. I can pay it off in 4 equal payments. My cheeseburger from Wendy, I can afford it now. No, don't do that. But this is peak debt. Debt has never been more extreme. They're getting into everything, right? They want you to finance your Wendy's order in 4 payments. DoorDash, I can't believe it. This is credit. It's debt on top of debt on top of debt. Now, debt's good in one way, right? A person's debt is someone else's asset, right? Like, for example, when you go get a loan, you go to the car dealer, you get a loan, you buy the car, you sign off on the dotted line. That's your debt. You're going to be paying over the next 3, 5, 7 years, whatever you signed up for. But whose asset is that? That's the bank's asset. Until it's not. What do I mean by that? Until you can't make your payments and you become delinquent. Car delinquencies are at a record high. Credit card delinquencies are at a record high. Car repossessions, they're going to take your car if you don't pay. I mean, this is very scary, but you got the rich people that they're living like kings, right? I mean, they can go out and buy whatever they want. Yeah, they throw it on the credit card because they get those miles, right? And then they can fly to the Bahamas on their vacation for free. So you got the rich people there living it up, living it up, living it up. But the other people there in the recession, some of those people are already in a depression. Why? Because they lost their job and they got their credit cards maxed out. That qualifies them as part of the depression that's coming for a lot of people. Now, I know if you're rich, I know if you're wealthy, you're going to be fine. I get that, but the poor people, they're not going to survive, right? I mean, they've lost their jobs. Jobs are getting very hard to find. They're telling you that this is a great economy. Economy is going down the toilet. It's circling the drain really quickly. It is free falling. We're in a recession, and if we're not careful, a lot of people are going to hit that depression level because they've lost their job. I live in Silicon Valley, high-tech industry, used to be tons of jobs. You can't get a job here. Oh, excuse me, you can go get a job at Chipotle and make the burritos for the rich people. That's what you can do right now because the tech jobs have gone away. These companies have hiring freezes. They're not hiring. That's just really hard to find a job if you're out of work right now. This is a problem, right? This is a problem. We got mortgage apps, mortgage applications, right? They're getting rejected now. You cannot get a refi. Refis are being rejected at the highest rate in the last 12 years. Now, you have to once again go back to the great financial crisis to find a time where the rejection level was that high. They need the money. That's why they're trying to do the refi. Even people locked in at 2.8% are trying to refi at 7% just so they can get some cash out because they have no money. What does this mean? That means their house is going to be coming onto the market because they just got rejected for the refi. They have that 2.8%. They're locked in, but they can't eat. They don't have any money left over after they pay the mortgage. These people, they went out and they bought houses with 50% of their income going to pay the mortgage, going to pay the property tax, going to pay the insurance. And these are all going up. So now it's exceeded 50%. They don't have money to feed the kids. They have one thing left to do, and that's to dump the house onto the marketplace. You realize over a million people are not paying their mortgage. Over 1 million people are seriously delinquent. We're going to have a wave of foreclosures coming. Going to double the inventory. Our inventory right now sitting about 900,000 homes on the market for sale right now. But over, let's call it 1,200,000, 1,300,000 are delinquent, right? Seriously delinquent, that are going to be going to default, that are going to be foreclosed upon, that are going to become in the new inventory, right? So it's going to take longer and longer and longer to sell your property if you can get out at all. What does that mean? It means prices will be coming down and down and down. I know not in your area. Your area only goes up. That's cool. That's really cool. It's a great area to live in, right? Nobody ever dies there. Nobody gets divorced. Nobody loses a job. It's a beautiful place to live. Your area only goes up. But the other places around the United States, you know what? They're not going up. They're actually coming down. Days on market staying longer and longer. Rents have gone down 19 consecutive months in a row. Things are changing. This is a fake economy, I'm telling you. It broke in 2008, right? And what have we done? We printed money, printed money, printed money. That's what we do. That's how we make the economy still run. But it's a problem now. You see, we used to print $1 and get $3 in GDP. Now we got to print $3 to get $1 in GDP. Soon it's going to be pushing on a string, right? It just doesn't work. You can't push on the string. There's nothing to push. So the printing of money, they can't paper over it anymore. We're in a serious problem. But Mike, we got the Doge boys out there. Doge boys, they're going to clean everything up, right? They're going to get rid of all the expenditures, right? They're going to cut $1 trillion, maybe $2 trillion. What does that do? Is that good for the economy? No, it sucks $2 trillion out. You see, that's what people don't understand. The only one keeping the government afloat is the government, right? They're the one printing the money, spending the money. They stop printing the money. They stop spending the money. What happens to the economy? We're in a recession now, I keep telling you, but we're going to be sucked down into a depression, if not a great depression. It's getting scary out there. A lot of people don't know what to do. They don't know how to make ends meet. They just lost their job. Maybe they were spouses. One of the spouses lost their job and took that two incomes to qualify to pay 50% of their income to buy the house. Now they got the house, but they only got one income. Their income's been cut in half, and oh my, they can't do it. They just can't do it. They don't know what to do. So they're sitting there in the house not paying, right? But the bank's going, hey, these people have been sitting there for 4 years, 5 years, not paying. And that's a problem, right? So the bank forecloses, they put it, they call up Tall Mike. That's what they do. They go, Tall Mike, dump this house on the market. Just get rid of it, force the bank. They don't want to hold the houses. No, they don't even want to take them back. That's why they give them a little bit of lag time. But isn't 4 or 5 years too much lag time? If you haven't paid your mortgage in 4 or 5 years, it's time for you to get out of your house. It really is. Look at us taxpayers. We're tired of paying for you. That was the last administration. This administration, we're not going to pay for you anymore. A lot of people think that's being cruel. No, if you're sitting in your house 4 or 5 years without paying, it's time to become homeless. It's time to live in your car. It's time to move in with your friends. Look at it. I know there's hard times out there, and it's going to be hard times for a lot of people, but if you can't afford the house, that's why the houses are locked up, right? That's why the inventory hasn't flown through, because it hasn't been a normal market, because we put these constraints on. We put the moratoriums on. We put the, where you redo the mortgages for the people, right? You give them, well, they had a 30-year. They couldn't pay that. Maybe they can pay a 40-year. No, they can't pay a 40-year. Okay, let's do a 50-year. Pretty soon they'll do a 100-year, but they still can't pay. Why can't they pay? They have no job. They have no money. Their credit cards are maxed out. They're in a depression. Look, eventually those houses have to come back onto the market. And then you're going to get what's called price discovery. You're going to find out what your home is really worth. Now, looking in my area, I had 1,400 square foot home. Just put a price tag of $3 million on that. No way should it be $3 million. When you get price discovery, it's going to be about half that, maybe a third of that. It's going to come down, but that's going to happen when you get to forced selling, when this recession starts. A recession's already started. For a lot of people, it's already a depression, but it's coming. It's not going to be easy. There's going to be some pain to be felt. People don't like to feel pain. Look, I don't like to feel pain either. dealer. I just went and had a root canal done. It wasn't that fun, really. Actually, it wasn't that painful. They numbed me up really good with that Novocaine stuff. I mean, my face was like numb for the whole day. But yeah, I had a root canal done. I didn't want the pain, so I said, doctor, numb me up. Give me that Novocaine. That's people don't want to feel the pain, but they've been in this drugs, right? And they've been avoiding the pain. We've been injecting drugs into the economy, and the people have been avoiding the pain. What are the drugs? The drugs are the printing of money, where the government just prints and prints and prints. That's the heroin that the economy's on. You take that away, and there's going to be withdrawals like you can't believe. It's not going to be pretty. I didn't mean to rant here, but it's not going to be pretty. I'm Tall Mike. Like this stuff, give me a thumbs up, punch the subscribe button. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.